Hello everybody, this is the Trading Champs and I am Dr. Sasha with you. Hope you're all keeping well and doing great. Let's do something very interesting. Let's have a look at last 50 years gold data. I see that in 1770, gold price was around 35 US dollar, 1770, only in 10 years. 25 times up, around $850. What was the reason for this? It was the Soviet intervention of Afghanistan and the impact of the Iranian Revolution, which prompted investors to move into the metal. Once it reached 850-ish area, in 1999, gold drops back all the way to the low, retraced around 250 level, and from here, there was an agreement by 15 European central banks to limit the gold sales to secure it. And then again, gradually and slowly, due to weak dollar, oil prices, firm, and geopolitical worries, gold kept moving all the way up to 1967 area. 2011. Price again for 4.5 years, 1920 to 1046 area. We again rally up. Let's have a look. The most recent push up is very well here as well. This level, 1454 level. That's from where gold pushed up 2080, 75 area. So this was the breakout, retest, and continuation. Since then until now, we dropped down and then we came up to almost 50% area of the drop and then dumped down again to make a double bottom here, right here. And then slowly and gradually rallied up almost to the top again. Now let's have a look at the fib levels. Once again for the whole drop down. So these are your fib levels. Gold came up to 50%, higher, in fact closed above here in this area, right here, and then dumped down, double bottom, rise up. Last monthly candle. You see this monthly candle here? This monthly candle has closed above this one, and onwards we have a big push to the top side. Why don't you think that it is going to close above at least this level again? We got to watch that. How is this monthly going to be? We are only 6 days. This push up from down to the top side is only 6 days. From 1902 to 1970, that is 683 pips. So this is our weekly chart that we have on here. And as you can see, we have closed absolutely bullish on this week, right? There's been no bottom wick, no top wick, and which is very, very unusual looking at the history. And the candle has closed above 1960 resistance that we have on here. This was on weekly, kind of last resistance, 2035, and where we are at right now. We have closed above that level. So now, if I'm going to drop down my fib level, between the high that we have here and where we are right now, we have only one more significant level. That is 0.786 level right here, which is 1990 area here. Okay, above this, it's going to be straight up. And if it's not going to be a double top, that means we're just going really high. I want to also tell you one thing. Last Monday, when price opened, it opened with a $40 gap up price. Okay, we jumped up $40 because of the news over the weekend. Russia and Ukraine war news. Jump up of $40 on Monday, and then there was no bottom wick here. Only a push to the top side. All this week, it has not retraced back to fill up the gap that we still have left down here. So there is a little gap, 20 pip gap, $2 gap that we have on here, and it's still open. Fed has already announced interest rate increase before the next FOMC meeting, despite of the war. And it depends on the Russian and Ukrainian war that the price is going to stop here or it's just going to continue to the top side. Interestingly, looking at this bottom, this leg has started either from this area all the way. The low was 1677 in this area. So big banks, market movers have taken their positions here. Next low was 1721 and then 1754 area, this December FOMC meeting. And whoever is taking a buy in this area, they're short-term buys maybe, or those who know what's going to happen if we're going to make a all-time high and continue to push to the top side all the way, right? Global economy has been very, very disturbed throughout, worrying for what's going to happen now. If, in case, there's going to be a nuclear war and they're going to use nuclear power, forget about, this all-time high or 2000s. I think it would be 3000, 4000s, you never know until where, right? Because those type of wars, they take ages and they continue for long and long and long. And if other people are getting involved in this war, it's going to get dirty. It's going to get very dirty. Inflation is going to be very, very high, and people might get bankrupt. Only thing that's going to save us against inflation will be gold. I'm not trying to scare you here on a realistic level, what the condition is right now and what we could be expecting. One country is going to use atomic power, then there are so many more countries as well. They're going to go all offhand and they would want to take over other weaker countries. So this has to stop. Any peaceful news can take us all the way easily back down and stop this bullish trend to the top side. On Monday, we do not see anything that is very critical. Tuesday, nothing much. Wednesday, we have job opening, crude oil inventories, and 10-year bond auction. Thursday, we have unemployment claim, CPI, core CPI. Friday, we have consumer sentiment. All of these fundamentals do not matter at the time when we have war. Only the breaking news about the war is going to make a change. Either it's going to start melting down or it's just going to continue shooting up. Now, let's have a look at the daily chart. On Friday, when we came onto the chart for the Asian Zoom session, we already had this news. Ukraine nuclear plant, Russia in control after shelling. And when there was a threat for the fire and maybe nuclear radiation and whatnot, and they finally took over, price only continued up and closed above 1960 resistance level that we have here. This area. All of that. It has closed above that and very, very extremely bullish at this point. Between 1970 and 2075, we have only one resistance, that is this level here. And this is also the 78% retracement from the high to the low. That's the only level we have on. If this level is crossed, we can be making further new highs. In case, if this 1990 level is rejected, right, then we have our horizontal support that is at here, 70-75 area. All this area, and this is the horizontal support. Below that, we have our trendline support as well, around 18, 20, 25-ish level. After rejecting this area, in case if we do, we could be just going sideways and have our levels that is right here between 50, this breakup structure, and 1990. There could be some sideways on this level. And then it can continue to push to the top side. Now, in case, if it continues to push to the top side, all the way to the top, right? Wherever it's going to go, make a new high or stay here, it continues with no retracement, then we can see that there could be a meltdown. You see this drop that we had here? From 2076 level, back down 1864. 1, 2, 3 days, 3 to 4 days. We were back. So if it pushes up with no retracement, no correction, then that's the scenario that I'm looking at. Alrighty, so here we are with our 4-hour chart. We see this ascending trend line here, right? this is the trend line which's been supporting the price so far until it started shooting up to the top side. We have closed above 1961 level. The other significant level at the top is 1990. Supports that I figure out, horizontal support is 1906 here, and then this 1880 level. We have another one here, this is another horizontal important key level, 1990. So we got 1, 2, 3. Now, before this support, we have our dynamic support of the trend line as well, that we could be respecting on our way back down, right? So first we have to come below this area, and then we have to look into further areas at the bottom side if we are going to continue pushing to the bottom. 1 hour chart that we have on here, and for intraday traders that we can look at, we are in the channel, upward channel, right? And the nearest area target is 1973, 1974-ish area, somewhere here, right? The previous high that we had here. And we closed 1970. I want to see, are we going to reject this area? Are we going to cross above? Or are we just going to even not reach there and go for some retracements, right? If we go for some retracement, where do we see the retracement? Back to this level here, where the price broke out of, right? So have this marked onto your charts, and this could be your current area of interest from here to here. If price rejects this level, well and good. I'm going to expect it to come back down to 60, this OB and the current OB that we have, small time frame, and this 50-ish area, these wicks, double top on 50, right here, right? So I'm going to be waiting for a reaction. If it rejects here, I'm going to look for a sell setup and see if it's going to come back to its support 1950 level once it crosses below 1960. Otherwise, for an instance, if it closes above, I'm going to be looking for this level, 85, 90, anywhere in this area. That price is going to continue pushing to this top side. If this is crossed, then we clearly have 2000, right? And above that comes 2020, 25-ish area, which is important, right? And if anything above 2020, I'm going to straight away expecting a double top. And above that, I got no clue. Okay, all of this depends on the news, the breaking news, the one, something like the one we had at the start of the day on Friday. Let's say, for example, if price is coming to the bottom side. So below this area, we have this support, right here. 30, 35-ish area could be tapped into. And then we have our horizontal support at 1925-ish. 1906, but for that it should be melting down. We also have almost 20 pip gap when price opened up on last Monday. It shot up all the way to 1927 area and then came back down, left this area and continued coming down, but did not close below 1991 area, whereas the gap is right here, 88 level. This needs to be closed. That's it, guys. So please trade safe, and I have my Telegram and Instagram Discord links down at the bottom. I keep updating important information through the channel, so keep an eye and happy trading. Stay safe.